With the housing market being as unstable as it is, many of you have been asking, are we on the brink of another financial disaster like 2008? And what does this mean for homeowners and investors alike? Well, whether you're a homeowner, an investor, or just someone interested in the economy, in this video, you're going to understand exactly what's probably to come if we face another financial disaster. I'll be breaking down the signs you got to watch out for and how to protect yourself and actually start growing some wealth even in these uncertain times. So grab your coffee or a snack, obliterate that like button for the YouTube algorithm, and let's get into it. So there's a few key points I'm going to bust down in this video, but the first thing we got to look at is the historical context of the last real estate meltdown, which was 2008. Now, this was a real estate specific crash. You guys always hear me differentiate between an economic crisis and a real estate correction. For example, we're likely going into an economic recession very soon. That is almost guaranteed. But that doesn't always mean we're also going to have another real estate correction like we already just had about a year ago. And in most states, it was about 10 to 15% in prices coming down. And in Canada, for example, it was about 20% in a lot of key areas. So the real estate correction in all rights already happened. Are we going to have another one? Well, that's what I'm going to talk about right now. So in 2008, this was a subprime mortgage crisis. And basically what that means in layman's terms is people were packaging shit bonds and basically betting that those bonds wouldn't crash. Now, it is too much in this video to explain what a subprime bond is basically and how they packaged it, but they're just basically packaging really terrible loans from people who should have never gotten a loan. And they would package it up and masquerade it to look like it was a good bond, a good investment to bet on, but it wasn't. Now, all of that financial crap has really been cleaned up since 2008, especially in America. So the odds of that happening again right now is super unlikely. The bank lending standards in America have greatly increased for residential mortgages, and there's just a lot less of people who have a sub 500 credit rating getting a mortgage for $1 million home. We're not seeing that anymore. So that's kind of the slight difference between 2008 and now when it comes to real estate. Now, like I've always been saying in my videos, the economic recession is likely still to come. We're going to see more job loss. We're going to see people in the economy spending less money on goods and services. People are more in save mode right now, which is going to lead to a lower GDP. That's what's being predicted. And as I always said, a real estate recession doesn't necessarily mean you're going to have a real estate correction. In fact, it almost never aligns. Now, current mortgage trends today are very different. We have the highest interest rates we've ever seen in the last 40 years. And as I mentioned, lending standards have greatly improved, especially in America and especially in Canada, where we're so conservative. It's absolutely insane. In Canada, you got to put a lot of money down. You also have to qualify at a way higher rate at 2% more than what the interest rate currently is, just in case interest rates go up in the future. There's kind of that buffer. People can likely afford an interest rate hike. And when you're doing 2% more than right now, which is historic high interest rates, anybody buying real estate right now is going to be golden, as long as they don't lose their job or have a divorce or whatever that causes them to sell and leave. So that's what's going on for mortgage trends. I don't have to explain to you right now what's going on. We all know interest rates are incredibly high, which is leading to buyers buying less homes right now. But that is about to change as interest rates are likely to come down. And also, millennials are just getting sick of waiting. Now, the one curveball is the economic indicators. People always say, yeah, but Matt, if everybody loses their job, how can they afford their home or afford to buy another property? This is a good question and a common misconception or misunderstood idea anyway. If we have an economic crash, an economic correction, which is definitely gonna happen sometime soon, whether it's mild, whether it's shallow, or whether it's intense, we're gonna have an economic recession of some sort. That is just gonna happen. Now, here's the thing. No matter how bad it is really between a shallow or a mild recession, even a more slightly serious recession, the people that lose their jobs the most are middle class and lower class workers. Now, here's the thing to understand about real estate, and especially right now in this new economy. The people who are buying real estate at these, record prices generally are middle class and upper middle class, or of course the rich. See, lower class workers aren't really ever in the home buying market anyway. So even if we have a more serious economic recession and we start getting a lot of job losses, it's most likely going to be concentrated against the lower class. Well, they weren't buying homes anyway. These are the renters of our economy. And this is why that when we see an economic recession, it doesn't really have a massive impact on the real estate market. This happened in the early 90s, this happened at the dot-com bubble, and this happened during the pandemic. When people started losing their jobs, it was lower class people. If the middle class people also lose their job, that sucks, but often middle class people have more skills or qualifications to usually find another job in a reasonable amount of time. These are people who graduated college or university, they have something, or they have a lot of work experience. So finding another job because ABC Co. went out of business or whatever, not the biggest thing in the world. They usually find another job. And of course, upper middle class people, these are more of the self-employed, the business owners. They're going to be just fine in most cases. They'll find another job. They'll be able to find something to make ends meet. It's the lower class people that lose their job and can't find another job for months and months and months. And they sit on welfare or government assistance of some type. Obviously, you can't qualify for a mortgage if you're on government assistance. That's not a job. So this is the giant misunderstood thing with economic recessions and real estate recessions. They're totally different. For example, a year and a half ago, that was the real estate correction. But everybody was working. Everybody pretty much had a job a year and a half ago. We're only now starting to see job losses, but we already had a real estate correction. That's because of the interest rate hike cycle and the sentiment in the real estate market for buyers not really wanting to buy a home right now and seeing where things are going to go. And now that rates are going to be cut in a matter of months for most G7 countries, what do you think is going to happen to the real estate market? All the buyers are going to come running to the market because now interest rates are going to be on the way down for the next year and a half, 2 years, 3 years. That is for sure. And everybody knows it. So why would the real estate market go down when real estate is going to be more affordable? But the economic recession is just about to start. See, they don't always align. So what should you, as an aspiring real estate investor or just someone who pays attention to the economy, what should you be doing at this time? Well, if you want to be buying real estate, you better be getting your stuff together and becoming an expert. This is something I always talk about specializing in one area, one town, and in one type of real estate. For example, single family, multifamily, student rentals, Airbnbs, whatever your thing is going to be, just specialize and focus. Because as I said, the bottom for real estate is highly already in. We're at the bottom. It's time to go up now. The next real estate cycle is just about to start. So if you're becoming an expert in real estate, getting all your stuff together, getting all your money together, your partners together, getting all your skills together, the next 5 to 10 years, I truly think are going to be absolutely amazing for real estate. Buckle up and get ready for the next cycle. Let me know your thoughts in the comments below. Do you agree with me? Do you not agree? And also, don't forget to hit the subscribe button to get daily videos. I'll see you in the next video.